Welcome everyone. This is Desi Vijay. I'm a North-South National Team member and a coordinator for webinars. Hope you're all doing great today. Today we are having a great session protecting your wealth and also considering philanthropy to give back to the society. Glad to see you all here today. Uh, we are really pleased to have a person well known to us here to share his knowledge in this subject with you all. I'm really glad that we are able to bring this today to you. Welcome to yet another exciting webinar. Please also note that some of our past webinars are also available in our North-South YouTube channel. Please look for it, subscribe, and then watch them at your leisure. So thank you. And finally, I take this opportunity. Thank you all for a wonderful series of webinars we have been presenting to you so far. Today's topic is estate planning and philanthropy. We have a very accomplished person before us to talk to you who has done what he says. So he's a most experienced and knowledgeable person in that area. And we also made some survey questions before the session, and hopefully he will touch upon those responses you have made to those questions and address the topics you really want to listen to or interested in. It gives me a great pleasure to welcome Dr. Ratnam Chitturi, the presenter of today's session. He is, of course, well known to us as a founder of North-South Foundation and really do not need any introductions. But he has a PhD in operation research from prestigious New York University, and he has worked on many illustrious career spanning 3 decades and excelled in very pivotal roles in Fortune 500 companies. His professional journey is marked with corporate excellence, dynamic entrepreneurship, and involvement in multiple startups. To be in particular, he is serves as the governing council of Indic Academy, and his recent endeavor, he has established Pearls of India Foundation, a non-profit organization dedicated to driving transformative projects with a profound impact in India and the United States. So I can keep going on and on, but without further ado, I would like to welcome Dr. Chitturi to make his presentations to us. Here you are, Dr. Chitturi.
Thank you, Desi. I would like to thank North-South Foundation and Desi for giving me this opportunity to share with you some of the things. I'm really excited. I'm really excited to be here talking about this topic. This has been on my mind, and I had the opportunity, a lifetime opportunity for the last more than 30 years in this domain. So let me proceed and quickly, and then come back towards the end with the questions you might have, and I will try to answer. As I often say, I'm retired, but I'm available 7/24. If you have any questions, even beyond this presentation, you can send me messages or email or call me. I'll work with you. And I'm excited because every one of you, want to do something. You're curious about this topic, and that itself is really exciting to me. Okay, some of you answered the questionnaire, and I went through that. I want to share some of the results and move forward. Thank you. The first one, age group. The most of you are in the 50 to 59 age group. Amazing. You started thinking about this topic, and it's a perfect timing, and you're the right people to come to this session, and so I'm really excited again. Have you created a will or estate plan? 50% of you said no, and so and some of you have some knowledge. And what you need, number one, a living trust. People ask, why do you need a living trust? To avoid probate. Probate, that means after your passing, in many states, it goes to probate, a judge. And the judge will then appoint a lawyer to look into your trust. And the lawyer charges money, hourly charges. So they're going to run the clock, and the lawyer gets a lot of money. And I've heard cases where the lawyers were getting six figures. Amazing. So you want to avoid that. So every one of us, I've had a living trust 30 years ago, more than 30 years ago, the first time. The next one is living will. Every one of us should have a living will. What that is, healthcare directive. You know, if you're ill, do you want to have machines run you? You know, you need to tell that. For example, I have one. I told in the will, I said, I don't want any machines. I don't want machines running me. Give me. So that is very important. The next one, a will. We all should have a will. The will says the distribution of property and assets. You know, what it is, who gets what, and all that. It describes that document, which is very, very important. If you don't have a will, they will follow the state law, whatever the state law you're in. And finally, financial planning. You need a financial plan. Every one of us should have a financial plan. We are fortunate to be in this country. We're fortunate to be in a position we're in, right? Especially if both houses are working. You know, Indian American population in this country, they're doing well. They're doing well financially. They tend to be in the top 5% or top 1% of the population. So we should have a plan. Well, we should have a plan. Next question. How familiar are you with the following charitable vehicles, right? DAF, private foundation, and public foundations, right? So many of you said you're not familiar with it. So you're in the right place. You're going to learn a lot on this, on these things. And then also, when we asked which type of legacy appeals to you most, a lot of you said not sure yet. So we're going to discuss this topic in this presentation. Then the next one is learning goals, right? And so many of you said you wanted to learn a number of things. So I'll try to share my knowledge and what I know. Let me see. It's coming to. Okay, now I can see it. Agenda. What we're going to through, why your legacy matters. We're going to go through that. Oh, now what happens? Okay, and philanthropy. Philanthropy is a bridge to the future, right? You're helping for the future, tomorrow. There are three pathways for lasting impact. We'll go through them, and choosing your legacy, which pathway you would like to go. And if you don't need to decide today, you can decide, think about it, and then you can decide your journey, life journey. Finally, we'll end up with a Q&A. This is important. There is a greater purpose. People say purposeful life or a meaningful life, right? In India, in our books, we call it karma yoga. Karma yoga is one of the pathways to, if you're interested in moksha, this is one of the pathways. And in karma yoga, it's called nishkama karma, which means you're not looking for the reward. You're not looking for the reward. without reward. So first thing is to help others. I need to know myself. If I don't know myself, how can I help others? I can't. So the next step is to helping others. That is a greater purpose. That is leads to meaningful life. So when you help others, the more you serve, the more you learn and grow. So it's circular. You improve through time by helping others. You help yourself, and it's a wonderful way to spend your life. So why estate planning matters, right? And what it does is, it aligns your wealth with your values, what your values are, right? Some people want to help others. Some people want to, set up for different purposes of, who you. There are many pathways, many things you can do. Values, you know. Some people want orphanages. Some help orphanages. Some people want to help women empowerment. Whatever it is suits you. You need to align that your wealth. So to fulfill your values, you need wealth. Without wealth, you can't do anything. Without money, you can't do most of these things. Of course, we all want to reduce taxes so that our impact would be maximum. Right? Then also, we need to provide clarity and confidence to loved ones. People in the family, they need to get a clarity. It should not be vague or absent. Then people will start um, forming their own opinions. And so you want to avoid that, avoid wrong expectations, uh, and protecting your family from conflicts. And once you do the planning, you share with the family, everybody knows where you stand, where they stand, so that you can avoid future conflicts. You've seen many cases where people start fighting after the death. We want to avoid that. And funding a causes you care about, whatever that cause is. If you want to, your cause is green earth or ecosystems, or and so you can do that. Welfare of animals, animal welfare, but whatever that is, right? That you care about. What is the role of philanthropy can be beyond giving. One is giving. For example, you can write a check to Red Cross, right? That is fine, right? But beyond that, some people want to go beyond that, building a family identity. Some people like that. They would like to have their family identity. Engaging the next generation with purpose, right? So we came here, we're enjoying our life on Earth, and you want the next generation to do better than we are, right? And some people say we should leave this Earth giving in a better place than we inherited. Each generation should try to do that. And then creating a structured, lasting impact. This is very important. For example, I was inspired by Swami Vivekananda. When he came here to Chicago, he was writing letters back to India. And one of the things he mentioned that India lacks institutions. And he probably saw Red Cross, Salvation Army, institutions like that. And so it's very important to do that. So when he went back, he started Ramakrishna Mission in India. And even today, it still stands. So it's important to have that structure if you want to have a lasting impact. Oh. And also shape the future of the cause you believe in. You do it, the sooner you do it, the better off you are. And I'm glad many of you joined at a young age. That's wonderful. The one pathway it's called Donor Advised Fund, DAF. Okay? It is simply, I'm trying to give you an analogy. Those of you who don't know what DAF is, think like a piggy bank. In piggy bank, you put money into it, you accumulate. So what the organization does, the organization that you put money into, they give you a donation receipt when you put the money into the piggy bank. They keep it. They can't spend it. They keep it. And then based on advice, they give grants. If you say you want to write a check to some foundation, right? And then you tell them what the foundation is, how much you want sent, and they will do that. So they do that for you. So this is a very simple explanation. In other words, you put the money now, you get tax deduction now, and you can spend it in the future. You don't have to spend it today, all of it. You can spend it tomorrow, a year from now, 5 years from now, or upon your retirement. Let me see. Okay. 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 It's simple and flexible. All you put the money, you don't have to, they take care of all the paperwork, all the administration, and the only thing you need to do each year, decide where you want the money to go. And so when you put the money into it, you get the immediate tax benefit. That's the wonderful thing, right? And also there's no administrative burden. You don't have to do any management. And then after you can appoint a person to as a heir to follow that, right? And so they can follow your instructions after your life. It's very simple, and everybody, this DAF is became popular. It was there a long time ago, even 100 years ago. I heard it was there. It's very expensive. You had to put a lot of money into it. But over time, about 30, 40 years ago, they made it a little bit easier. And starting then, a lot of people are now getting into it and putting their, in fact, the biggest DAF organizations are sponsors. They call sponsors are Vanguard, Fidelity, Schwab. These are three organizations are involved. You can set up your DAF, any of them. Of course, there are many, many others. So I'm just giving you 3 examples like this. Okay. Now these 3 DAFs, the 3 companies, and comparing, if you want to open an account, the Fidelity and Schwab requires only $5,000. Very simple. All they need is $5,000. You write a check. But Vanguard requires 25,000. More money. What do they charge? 0.6% for the first 500,000, right? And they're all same, 0.6%. After that, the fee goes down scale, and so that's the essence of it. Opening an account. Then another interesting thing, you don't need to read all this. I'll summarize it. So one thing is, the important thing is, you at some point you say, I don't like this DAF. Can I transfer it to another DAF? You can do that. They made it easy now. The government allows it, and all the organizations allow it. So you can take money out, put it into another DAF. For example, if you have it at Fidelity, tomorrow you want to change it to Vanguard, you can do that. They all accept, and they all let you take it out, It's very simple. Since you already got donation, tax deduction, you don't get any tax deduction again. You only get once. Once. Then asset size, right? How big are these? Fidelity is the largest at $56.7 billion. Right? The second is Schwab, 31.6 billion, and Vanguard is third, 17 billion. Maybe it's because uh, you have to shell out $25,000 to open an account. That may be the reason. Then options, right? When you put the money, what do they do, right? And they give you options, the investment options, right? They have like conservative, moderate, growth, aggressive, and if you're 30-year-old, maybe you want aggressive, depending on your own goals. And they're all similar. They all allow you different categories, risk management, right? Then if you have lots of money, $250,000 or more, or 500,000, you can have custom portfolios. You can talk to them, and you can discuss, and they will try to customize investment uh, to your desires. And the lowest administrative cost is Vanguard, and I like Vanguard. Their expense ratio is small, and but they require, when you open it, it's 25,000. Only when you open it. After you open, you can send $100 or $500 a month or something like that. It is fine. Okay, so that's so far about DAF. Very simple. The next step is a private foundation. A lot of us don't know what a private foundation is. So I give you some examples here so that, let me see. This comes in the way. I can't see it. Oh, okay. Now I know how to hide it. Okay. Rockefeller Foundation, most of us don't know. It is a private foundation. Ford Foundation is private. Bill Gates Foundation, that's private. MacArthur Foundation, Kellogg Foundation, all these are private, right? And private foundations, you have full control for your family, right? You have full control, unlike the AF. Next one. Okay, it's not moving. Oh, okay. And a private foundation, uh, you can manage your assets any way you want it. Right? You can have your own. You can manage yourself. You can have a money manager. It's up to you. A public foundation operates, whereas, oh, I got the wrong screen here. Okay, sorry. We're on private foundation, right? So the total control, set your own grant making decisions, right? You decide and you execute it. And then, but it is a higher cost, administrative responsibilities. You have to file taxes, Form 990, PF every year, right? And also file with the state, depending on what the state requires. So there's some administrative work that you have to be willing to do that. And then annual, every year, you have to spend 15% distribution of your assets every year. In a public foundation, there's no requirement. But in the private foundation, there is a requirement 5%. If you don't meet this, there will be penalties. And so this is a little bit more work, but depending on your values and what you want to do in terms of legacy, you make the decision. Okay. And I know over the last 3 decades, two people, I helped them set up the private foundation. So if you want to set up that, give me a call. I will help. Or you can talk to a lawyer, and yeah, okay. That is private foundation. Then public foundation, right? You can combine private foundation and then have a public foundation to go with it. And examples, North-South Foundation is a public foundation. Khan Academy is a public foundation. Ashoka, all Ivy League, Harvard, Stanford, all these universities are public foundations. And American Red Cross is a public foundation. The requirement in public foundation, a major requirement is 1/3 of the revenues should come from public, small donors, right, from the public. So that is a requirement. This is the what they call ultimate legacy. You're combining the private and public, so you have a total control of A through Z supply chain, and you can use the private foundation to manage the assets, and then use the public foundation to do the programs, take the initiatives. Of course, this has the highest complexity and cost. But building a generational institution, you're building a institution that lasts long, and so your legacy continues for a long time. That's the idea. So I was looking for examples. Are there examples of these private-public foundations? Interestingly, I found several. The first one is Gates Foundation. Right? They have a what they call a Gates Foundation Trust. The trust is a private, then Gates Foundation is public. So what they do, the trust funds they can spend 5% and send it to Bill Gates Foundation. And Bill Gates Foundation, as they runs the grant programs, right, that you hear in newspapers, whatever they do that through the this operating arm. Same thing, Bloomberg, same thing. There's a Bloomberg Family Foundation, Bloomberg Philanthropy Incorporated, and they also what they do the public foundation to run the Act 2 programs. Right? So they have total control. And another thing I found interesting is Dell. Dell has a foundation. Then they have what they call Dell Scholars Program, and they use scholarships. And what they do, the public foundation administers the scholarships, like North-South Foundation. So I was interested how they do that. If you look at the Dell, it's interesting. See, there's always a pathway, regardless of what the regulations are, the laws are. There are a lot of pathways, a lot of flexibility. You just have to know how to navigate. Right? You need to learn. So what they do, they take the private, the family foundation, and they what they do that they send a grant to the operating arm, right? It's interesting if the operating arm, which is public foundation, is not controlled by the private foundation, then it is counted as public support. Amazing, wonderful, wonderful. Then you have corporate contributions, something they have that's also public support counted according to regulations. Individual donations. It's interesting, they do the alumni matching gifts. That means when employees of Dell they do these matching grants, they get counted as public support. Kind of interesting. And then program service revenues. This is similar to North-South Foundation. North-South Foundation, when we conduct these activities, coaching and contest, we charge fees, and that's called program service revenues. And that it can count towards the public support. In our North-South Foundation, we say 2/3 of the fee revenues goes towards public support. And that's the reason, we pass the test, one-third test easily. And the investment income is also part of it is public support. It's kind of interesting. I thought, there's a lot to learn, and so don't get overwhelmed. Please don't get overwhelmed. You can learn one step at a time, right? And this presentation I have, you can have access to it. You can study it. Take your time. So visually, if you have estate planning, one pathway is just DAF, and you just tell the DAF, grants every year. And you have private foundation also gives grants. Same thing, similar, except the difference is private foundation, you have a total control of the assets, how they're managed, right? And also who to give and all the grants. For example, DAF, most of the time, they don't let you give money to an organization in India, right? They don't allow you to write a check, tell them to send it to India. They don't have that mechanism. They want a U.S. organization. In a private foundation, you may not have that restriction. You may be able to send to India. And then these are the ultimate private plus public foundation. A lot more flexibility here. Pro and cons, briefly. DAF is low cost, flexible grant making, and then the negatives are limited donor control after death, right? You don't own it. They own the money is owned by the DAF. It doesn't belong to you. It belongs to DAF. They control it, and so they don't no direct program operations here or full control. You don't have full control on how assets are invested. Private foundation, right? You get control, full control investing, where to go, and a lot more flexibility. But you have costs, administrative work, spend time, right? And the compliance and reporting burden. Then this is the here you get more options, more control, more flexibility, more instead of legacy, building your legacy going forward. And but at the same time, you get cost and manpower to run it, to do that. So this I will skip it. This is the same thing we went through. It just puts in a tabular form. Key considerations, because taxes is an important aspect, and control and flexibility. We went through that, and then also family involvement levels. Sometimes family doesn't want to get involved. Sometimes they may get involved. So you need to think of those kinds of issues, right? And the goals. One example. This is my own example. I wanted to show you. I set up a Chitturi India Foundation. That's a private, similar to Dell, and Parents of India Foundation. That's a public. Through this foundation, we do these projects. Gram Swaraj Collective, Children Videos, major project. I have 7 other projects, right? So, so this is to see if it can be done, right? And unless you try it, nothing happens. So estate planning value, you have to make those decisions. DAF very simple, private more control but more cost. Public foundation again, you can have a legacy, but then it has a complexity. So finally, you have to think about what aligns with your vision. Right? So next steps are clarify family goals and values. Right? You consult estate tax advisors and evaluate philanthropic structures, and then start early, right? And don't delay tomorrow. If you write, tomorrow on the wall, every day you see tomorrow, right? Tomorrow never comes. It's always tomorrow. That I will open up to Q&A. I will see if I can stop sharing. How do I do that?
Yeah, you
How do
can
I
go
do
to
it?
share and then say stop sharing.
Pause sharing, stop sharing.
Yeah, yeah, you're
Okay.
perfect. Okay.
Okay. Now, how do I see people?
Thank you. Thank you. Let me actually put you as a,
Yeah. How do I?
no, wait a minute.
Have two cameras.
I'll
Change
add you,
video.
I'll add you as a, let me, okay, I make you organizer so you can see the questions. But let me go through what we have so far. Um, would you recommend DAFI, DFFY, over Vanguard or Fidelity, etc., due to their lower cost? So, are you aware? I can hear you. You're on mute.
Okay. Can you hear me?
Yeah, now I can hear you. Yes.
Okay. Um,
There's a
I
program
listed
called,
the.
yeah,
Go ahead.
DAFI. Yeah, DAFI, do you recommend that or because they are lower cost?
Yeah, I would say it all depends on what you want to do with your life, right? The purpose, greater purpose. If you simply, want to, you have some, you don't know, uh, you're putting money, getting tax reduction now. You don't have to make all the decisions now. You can make decisions going forward as time passes by. It's a good way to put the money out and reduce your taxes yearly. And then, so where do you put the money? I listed three. There are a lot of others. Then three, they're largest. I tend to favor Vanguard because Vanguard is the way it's set up, structure, the history. They tend to be low cost and less, pushy. Uh, the Fidelity and then Schwab, they tend to be they're trying to push everything to what they have in their portfolio. Right? Vanguard is a little more flexible in that respect, and so you can do your own research. Your own research.
The next one I see is how to choose between DAF and PF. Is that based on the amount?
No, no. It all depends on what you want to do. Right? In the two cases that I helped two people set up the private foundation, they had their own ideas where to give money. Right? And like one case, he's a doctor, so obviously he wanted to give money to causes in India, also causes here, both. So he wanted to do it his way, right? So if you go to DAF, it's not easy. It's not easy to do that. And so private foundation is ideal for him. Like that, there's another person did that same thing. You have a lot of flexibility, both in terms of investments, right? And also in terms of where the money is going to go. And whereas with DAFs, it's not that simple. It's not easy. There are a lot of people that I know, they have their own private foundations. A lot of people, because of this flexibility that they can make their decision on their own and they don't have to talk to anybody, get approvals and all that.
So, what is the first step to create a private foundation?
First step is to um, you, you need an attorney. You can do it yourself, but I suggest you, but you do the legwork. The important thing I always, count money. Right? I don't like to spend a lot of money on administration. So you find an attorney that knows this, right? How to set it up and set it up in Delaware, Delaware, or even now they say Nevada. We try to find out minimum regulations. Illinois has its own regulations, and so for example, North-South Foundation was set up in Illinois, and we're stuck with it, and they have a lot of requirements. And then Perils of India Foundation, I set it up in Illinois. Then I found out they wanted at certain level, they want the audited financial statements. When you say auditor, by licensed auditor, not just any auditor, a licensed auditor. A licensed auditor automatically says, "Oh, I want $10,000. I want $20,000." You know, it's too much money. And so, where do you incorporate? You make the decision. If you go to Delaware, in fact, we switched Pearls of India Foundation from Illinois to Delaware last year for that reason. So that the important thing, where do you incorporate? The second one, you talk to an attorney and work with the attorney and start. It's not to set up, to start it is not a big deal. Of course, you need to get a 501c3 from the federal government, IRS. That requires, that is why you need an attorney. So you're doing the first time, you don't know the details, right? Because I had experience, and when I did the Chitturi India Foundation, I did myself. I worked with my um, grandson. I put my grandson. I said, you should learn about these things. So I had him investigate, read all the stuff, and then he and I talked about it, and so we did it ourselves. Ourselves. But don't do. If you're doing first time, you don't know, please don't do that. You use an attorney, spend some money, and do it right. Now, one thing I want to alert you: if you're thinking of giving scholarships, if you're thinking of scholarships, it's a big deal because there was a lot of abuses in the past. Because of that, IRS has a lot of restrictions. There were a lot of queries. You had to fill out a lot of paperwork. So talk to me. If you're interested in scholarships, talk to me. Send me an email. We'll talk. But otherwise, it's a simple process. Simple process. It should take time. Of course, the IRS now with Trump, right? He's reducing the manpower and all that stuff. So when we tried it, file it, nothing happened. It didn't come out. It took forever. Then I had to call them and say, "What is going on here? And why is it take so long?" And then they apologized. "Oh, your file is not on top. Your file is on the bottom of the pile." And I said, "Can you bring it up to the top?" And he's already 6 months or 5 months, whatever. And they're supposed to process these things quickly. If it's scholarships, yes, it takes time. But otherwise, you should get within 30 days, 60 days, or 90 days, you should get a IRS 501c3 certification, right? To set up the company, you don't need 501c3 certification. You just set it up, just like that. A few days, you can get it done. And but then you get the IRS. Also, IRS, you got EIN number. That is it, just like Social Security. Every organization has a EIN number. That number you can get it right away. You can get it, once you incorporate, you file it within an hour, 2 hours, you get the number, and that's what's needed. You can get started, but don't, but to get the 501c3, if you have to give some receipt to a donor, you need 501c3 certification. You need that in your hand. So you can't do that. Yeah, okay.
Yeah. So it partially answers the question: is the Pearl of India as a U.S. foundation or India foundation,
No,
or
Parents of
both?
India Foundation is US foundation. See, all I talked about today refers to US, because the tax laws, how the tax laws work, how the regulations work. Both Chitturi India Foundation, Parents of India Foundation, North South Foundation, they're all US organizations.
Okay. Do the projects in India have to be approved by the government of India?
I don't know much. We have to do some research. If you're really interested, maybe I'll work with you. We need to find out more information. I don't even know the structure in India. Maybe you don't need a private foundation. I don't know. There are trusts. There are all kinds of trusts in India. And this came from the British, right? We were under East India Company, right? We were ruled by them. So they brought all the rules from England to India. So those same regulations, they modified, amended, but still they apply. So we set up North South Foundation India in India. We did that as a trust, and I have some knowledge, and that's a so if you want to know more, we have to do more research.
Some of them are asking for your contact information. I'm giving them the chitturi9@gmail.com. That
Yes,
works, right? Okay.
yes, yes, yes.
Uh, can the DIF receive contributions from others?
If it's DIF, I think it can. I think you need to find out Vanguard, Fidelity, what the rules are. See, North South Foundation, 20 years ago, I applied, North South Foundation became a sponsor of DAFs. And I found out to the attorney, yeah, they can do that. They can put into money, write a check to that. But then, as I said, you need to work with the DAF you're working with, whatever it is, whether they allow that. The law, IRS doesn't have any restrictions.
I'm not seeing any more questions coming in. Yeah, if you have any, please let me know.
Yeah, they can always send, people can send me email
Yeah, you can always.
or even call me, if you like to call, it's fine.
Yeah. And
I'm
and
glad.
there is no limitation on the amount, right? The upper limit for any of these, or
For which one? The
for
DAF?
DAF or
No,
PF
no,
or any.
any of these things, there are no upper limits.
Okay.
No.
So any okay. If it
Yeah.
is family foundation private, will they allow to take more than 10 people?
Yeah, there's no
Outside
restriction.
people outside the
There,
family. Yeah.
no, there can be, there's no restriction.
Okay. And then when you talk about scholarships being tricky, are you talking about in India or in US?
The US, US, I'm sorry, there was a lot of abuse and in the past. Because of that, IRS put a lot of restriction. In other words, the reason is people say, okay, I know this person, these persons need help. And you
Yeah.
want to write a check, get tax reduction. IRS does not doesn't allow that because everybody can do that. Every parent, you get thousands of children, maybe million kids going to college, they can all get tax reduction. So they had to put restrictions. So you need to have a process in place. Say what is the criteria? What is the selection committee? Who is going to do it? How is that? There's no conflict, because you can't have your children or your kith and kin or your brother children, whatever nieces get tax deductions. They want to avoid that. So to avoid all that, they put a lot of restrictions.
Yeah, I think that answers the next question. Can the scholarships be given to individuals or have to be organizations only from private foundation?
Yeah, they should be from an organization, and the organization have to. The ones I know, there may be other form structures. The structures I know is the public foundation is easier. Even private foundation may have more restrictions. I don't know. We need to look at the law, regulations, and yeah, you need an organization and a setup. Like in India, for example, we have a selection committee. Each chapter where we operate in India, there is a chapter, and there's a volunteers. There is a selection committee, and the selection committee has a criteria. What is the criteria that you use? And also there's an interview process. So you have to define the process, and you follow the process. So Indian government also requires that you follow the process, and they can audit. They can talk to the beneficiaries, scholarship recipients, and see whether you're following the rules. And that's important. In the US also, it's important. Yeah.
Uh, there's a question. I gave endowment directly to the college. Is it bad, or are you talking about giving scholarships directly to individuals?
No, if you get,
If you give it to
oh,
endowments,
if, okay, can you ask the detail? What is the question from the per individual, from the person?
okay,
I
yeah.
like to know what to say. I gave money in what
Hmm.
form and what purpose?
Yeah. Can the person add these details to the questions?
Yeah, I like to know more details of when the
Yeah.
person says, I gave money to university,
Hmm.
what form and what purpose?
Right. Yeah. Let's wait for the response. The next one is: can we transfer a DAF to PF?
Interesting question. Okay, DAF to private
PF.
foundation is probably not possible because DAF is a 501c3 public foundation, right? From a public foundation, you cannot go to private. From private, you can go to public, not the other way. The only time you can do that is, okay, there is a caveat. From DAF, you can send, if it's a small amount, and that amount can be spent, can be granted in the same year, then I think they allow. There is an exception to the rule. But you can't send a lot of money and that you want to use it for the next 5 years, 10 years. No, they don't allow that. It has to be given to the private foundation in the same year, and you're going to spend it not administrative cost. You spend it through grants. You're going to give it spend it through grants in the same year. Then they will allow you that as an exception.
Are both US and India foundations are different registrations? How do they
Yeah,
operate?
yeah. In the US, you first you register with the state, and then you get filed with the IRS to get the EIN number, and then get the tax exemption, 501c3. Yeah. In India also, you do the same thing. They call 80G, 80G, something like that. 80G exemption, um, income tax exemption. There, here, anything you want to do, you go through a lawyer. In India, anything you want to do, you go to a chartered accountant. Not all chartered accountants specialize in this, but most of them do. They understand the law. So you go through CA to incorporate your trust. And there in India, the difference is in India, registration is done with the government of India. You don't do state. There's no state registration required. It's required with the federal government. In the US, registration with the state.
The person has responded saying that they've set up a permanent endowment to the university, cash contributions over 3 years for giving scholarship to the individuals where they select the students.
Yeah, that's fine.
Yeah.
That's legal. That's perfectly legal.
Is that a good idea? She's saying compared to
Yeah. Okay. If it's in the U.S., I make some comments. Okay.
Yes.
I hope the individual doesn't get offended. When you set up a money here, number one, total control is in the university. You don't have any control, right? What the criteria use, what all that, right? Of course, you can have restrictions, work with them, negotiate, have an MOU. The best thing is to have an MOU, memorandum of understanding, on a piece of paper, not just a verbal, right? You need that. And the second, giving scholarship in this country is very expensive, right? You spend $50,000 an individual, $70,000, $100,000, depending on what the university is. And so if you say, oh, I want to give $1,000, it's peanuts. $1,000 scholarship they will give, but it doesn't really count. And the same $1,000 in India goes a long way, long way. So it depends. That's one of the reasons we did in North South Foundation. We give scholarships in India because if you're trying to, even if you're a global, right? We are here in the United States. We came from India. Use a global view. Then you're raising human resources. So what is the best bang you get for the dollar? You get best bang in the dollar by helping a kid in India. It's cheap. You can get many more people. So the human resources you're uplifting is many more. So you have more leverage, right? But of course, if you really bent up on the school you want to endowment here, that's fine. It's up to you. It's your money. Whatever you want to do with it, that's fine.
Yeah. Yeah, that gives the segue to the next one is how much of fund do we need to set up a annual scholarship of $500 to a graduating high school kids? And that meets certain criteria.
You're talking about U.S. in the
Looks
U.S.
like, yes.
Yeah, if you have criteria, that's fine. Some criteria.
I know how much of initial funding you should start with. That's what he's asking about for a $500 award.
Okay,
I think
endowment.
perpetual.
Oh, perpetual. Okay.
Yes. Looks
Okay.
like,
The
yeah.
normal the rule of thumb I use is 5%. You take the endowment, right? So let's say you got $100,000 endowment. Then you get 5% is 5,000, right? Right. That's 10 scholarships. That's how you look at it. 5%, whatever the endowment is, you use 5% as a bogey as a scholarship. So $50 will be $10,000. 10,000. You put 10,000.
Yeah, 10,000 for $500 a year.
Yeah. Yeah.
Do you give grants also to other than scholarships to organizations in India through Pearl of India Foundation?
Yeah. Pearls of India Foundation, we don't give scholarship at all. We give, I think I mentioned some projects. So Swaraj, Gram Swaraj Collective, that's rural India. And then the child videos. That's about Indian heritage. Um, to our children. Our children are losing roots here in this country. So we thought we would produce some videos to build that gap so they would know more about their ancestors, this Indian civilization or Indian knowledge system. So we don't use scholarships. If it fits with our projects, yes. And yeah, we're not entertaining other projects. We have a lot of work that we do. We have enough work with the volunteers and all. But if you really still want to pursue, maybe we can talk. You can send me an email.
The next one, I think you answered. Can we give Indian scholarship through DAF? And how to evaluate Indian organizations who play a role in giving
Okay.
scholarships to individuals?
The first one is if you have the DAF at Vanguard or Schwab or those kinds of organizations, they will not send the money to India at all. So they only send money to a U.S. organization. Okay, that's normally the case. And so now the second part in India, what was the second part? He said in India,
Yeah,
how do you evaluate?
how to
Yeah,
evaluate the
yeah,
organizations.
yes. I'm glad you asked. It's not easy because in India, the normal thing is, out of sorry to say, if you have 100 NGOs, 90 NGOs, you don't know what they do. You don't know what they do, really. So maybe 10 are good. So you need to look at the good ones. You have to look at the records. You look at their filings. Even Indian financial reports, auditor reports are really not that good. I looked at them. They don't tell you much. Suppose you want to know how much administrative costs it goes to. The auditors don't tell you that. Auditors don't tell you what the CEO is getting a salary, right? What the officers are getting. I know one company, I looked at the darn thing, I looked at the financials, and they call volunteers. I found out they call volunteers, they all get paid. That's not a disclosure, right? It's just that's a problem. So you have to do the research. And the North South Foundation is one we give. That's a good organization. Another one is the FFE, Foundation for Excellence. They do a good job. They are based in California, U.S. company. They have a Indian arm in I think Bangalore, I think, if I remember right. And they operate. They give the scholarships in India. They do a good job. These are the two I know, but there may be others that you need to investigate what their track record is and all. Good.
Okay, so let me see. I don't have any more questions coming in now.
If there's still people left, I want to make a comment.
Yeah, there are about
uh,
40 people listening to you
good.
now.
Yeah, I want to thank all of you, every one of you, spending your time listening to me. A lot of stuff. It could be overwhelming, and you can please feel free to send an email or call me. And I urge you to continue to think about it every day, every other day. Think about it. Make some decisions. You- I wish I knew this, what I am saying today, 50 years ago. I wish I knew. I didn't. But now you know. Nothing is too late, right? So you can start doing something. If you start keep thinking deeply, appreciate it. It's kudos to you that you're thinking about this matter. And I think every Indian American that are in good jobs, good situation, we should be thinking about whether doing it here or giving back in India. It doesn't matter. It's through helping others We help ourselves. Help ourselves. In fact, I asked a 97-year-old vice chancellor, retired vice chancellor in Bangalore. He was the chapter coordinator for North South Foundation. I said, he did a lot of things in his life. I asked him, I said, you are 97 years old. You did so much social work. What would you advise? Can you please tell me the advice you give to others? You know what he said? Two words. Two words he said. Help others. That's it. He shut his mouth. Very simple. Two words can change your life. Right? It will. I guarantee you it will change your life. And please, again, I want to thank you. I'm blessed to be talking to you. And as I said, I'm available 724. I wish every one of you do this, right? I like to do that. It's selfish. Our community, Indian American community, we are in this country. Our children are going to be here. They're not going to go back. So our roots are going to be here. So we can do something. We can do something in this community. If you here in India, diaspora, there's so many things you can do. We can change the world. We don't like the gun culture. Do you like gun culture? No. Do you like drug culture? We don't. Do we like Democrats and Republicans fighting each day? Nothing gets done. So we can do something. So there are things in India also. There are a lot of things that are not good. Right? So we can change. Each one of us can be change maker. If you start small, 1989 when I started, nothing. All I had is scholarships. That's it. That's fine. So you start something. Over time, it will grow. You learn more. You know, as you learn more, you can do more things. But start something, something, and get going, right? And as I said again, please don't be bashful. Don't be bashful that you'll be impinging on me and my time. No, I would rather do nothing else than helping each one of you become a change maker, help others. Right? Thank you.
I have a couple more questions come in, Dr. Chitturi. And also, there are two of you have raised your hands. Please jot down your questions because I'm not able to unmute or talk to you directly. One question says, everyone who is working here want to do something to their villages. How can they do it?
Yeah, please talk to me. That Gram Swaraj Collective is the one that does that we focus on the villages, how to, uh, the, let me put it this way, very simply. 5,000 years ago, our villages in India were sustaining, not only sustaining, they're prospering. Prosperity was growing. Amazing. I will prove it to you. Even 5,000 years ago, 3,000 years ago, even 1,000 years ago. When the British came, East India Company came, they killed everything. So we lost our prosperity. There's no prosperity. There's no prosperity. Only sustainability. They sustained. They got all the troubles they went through, still sustaining. But now that sustainability itself is being threatened. The sustainability is being threatened, right? So it's a survival. So that's the reason we were working with this Gram Swaraj Collective to build role model villages in each state, each district, each mandal, so that people can go see best practices, right? And so a lot of things are going on. And so please contact me. I have actually made a presentation yesterday on Gram Swaraj Collective here and a Zoom call. I'll be glad to work with you. And that's one of my pet projects. Thank you.
Yeah. It's really amazing, Dr. Chitturi. Even at this age, you are so much active and keeps doing things, multiplying everything. And it's amazing how you uh, spend your whole day in these kind of things. And I'm sure this is just a start of the dialogue. It'll keep going at least you initiated a spark amongst the people who really want to help out and give back and then help the poor in India. So I hope all of you will continue to uh, take this up and then do something about it when you can and while you can. Uh, okay, one question it says is North South helping any Indian American high school students for their college admissions to IB or IB plus?
Uh, in North South Foundation, there are a couple of different ways. One is we have webinars. We have webinars that help students through the college um, admission process. How do you go into colleges that you like? You know, what the pathway? We have those, and also we have the children who participate in North South Foundation at the chapter level, and they go to national finals. At the national finals, if they get the top score in each subject in each contest, 1, 2, 3. Okay? First place, we give $1,000 scholarship. Second place, 500. Third place, $250. We give those scholarships. We do that. We've been doing it more than 30 years now.
But not in getting an admission or anything. We are not doing anything, right?
Admission that's
That's a private, yeah.
you're talking about admission into a particular
Are they,
college.
or is North South helping any Indian American high school students for their college admissions?
Yes, that's a webinar.
Yeah,
We webinars accept
accept you.
you, right? They give you webinars. They do a wonderful job. There'll be others, we can, they see we can conduct more, right? More of these to help kids. That's basically high school kids. How do they go into college? What is the admission process? And what do you do? What are the criteria? How do you do essay writing and SAT? All of that. Yes.
Yeah, yeah. And also from the people who had gone through the process, also they can talk about it. So, um, thank you so much, Dr. Chitturi, for a wonderful session. Opened eyes for so many other things we are not really known all this time. And so I hope everybody pursues and then gets the ball rolling. Uh, do you have any last word to?
Um, that's it. I'm good. And
Good.
thanks everyone again.
So yeah,
Once again, have a wonderful day. And
and
let's work together.
yeah,
Let's
please
work together.
feel free to contact Dr. Chituri anytime you want. And also, I posted a link in the chat where Dr. Chituri wanted to have a little bit more information about how the session went and what did you appreciate and what you want to know more and all those things. So please click on the link and then answer those questions. So we will collect them as a summary like he presented in the beginning of the session today, and then we can use that for future sessions and future directions we want to do. So thank you everybody for attending, and then thanks for all your help and support. And um, particularly, I want to take liberty to thank Dr. Chitturi for his time, his patience, and his preparations in educating us through this important topic. Uh,
Yeah. Namaste to everyone.
yeah, this is actually one part of the personal finance series we I'm trying to put together. Next week, we are going to have a session on how to navigate the college funding landscape by one of the professors in New Jersey um, University College. And it's on November 2nd, the same time. But incidentally, we will be turning our clock back by an hour that day. So please join us at the right time for that session. And it's going to be a great session for particularly the students and parents who are ready to get into the college landscape. And then the following week on November 9th, we are going to talk about 2025 year-end financial and tax planning, what we need to do right now to before the year ends. So hopefully, watch for our announcements and please register and attend all the sessions and then get benefited. And thank you for your feedback. Please let us know what you think to webinars@northsouth.org or to the webinar, the links we have provided for your feedback. Thanks again, everybody. We will see you next time.